such proposals in this board meeting and clear it. So the first of all is the stockbrokers regulation, which is, as you know, 1992 regulation. And so therefore it is coming after a considerable period of time with a total comprehensive review. First of all, just to give you a scale, this particular regulation was 59 pages, which is now coming to 29 pages, which is about 50%. And also in terms of words, it was about 18,846 words. It's now 9,073 words, so that's about 50%, again, reduction in words. In terms of objectives, the first one has been the streamlining the regulations to ensure that the language remains simple, enhancing the ease of understanding. So the first is simplifying language and ease of understanding. The second thing is to bring more clarity, ease of compliance, and ease of doing business. Third objective, omission of repetitive, redundant provisions and alignment with other regulations. Fourth, updating the regulations with contemporary changes. And fifth, omission of forms which may be prescribed by way of circular. So there have been several changes. Major principles of compliance requirements which have also been mentioned, which are applicable to stockbrokers, have been included in the regulations. For example, protection of clients' funds and securities, risk management and internal control, and compliance with cyber security and cyber resilience framework, etc. Around 702 comments were received on the various provisions of draft regulations, and several suggestions were also received. After taking into consideration all of that, we have been able to make these regulations. The second, maybe you may have some questions, or you would like to say what all is contained in that. But I've just given you a broad framework within which this has been attempted. The second comprehensive review has been done, that of SEBI Mutual Fund Regulations 1996. So the new SEBI Mutual Fund Regulations is also a comprehensive replacement. It's coming after many years. For nearly 3 decades, it has served as a foundational regulatory architecture, but there have been several amendments, and now we wanted to simplify and consolidate. So,
viewers, that's all the time we had on this edition of Profit 360, but do stay tuned to the channel and keep watching NDTV Profit.
What does, say, 11 years of Modi compare with in a global context?
He's going strong. Part of it is a weak opposition. Part of it is he's very disciplined. This is his life. It's why I've said that Modi is probably the most consequential prime minister since Nehru. And he's reshaped politics. He's reshaped the nature of the kind of master narrative of Indian history.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
"2025 has been a tremendous year for markets, money and milestones. And we have tracked it all right here.
As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
What does Sufism mean to you?
Sufism is about love. Higher ideals are more fascinating than normal love song or anything. Talk about Khwaja Mere Khwaja, Kun Faya Kun. It's all about higher ideals.
I'm bringing the same spirit to Delhi. So book your tickets from District app. See you, Delhi.
They rule the world. 1 billion hearts. Now, meet the champions who made the nation proud. The Indian women's cricket team at the NDTV Indian of the Year.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create.
Good evening. Welcome to NDTV Profit. This is The Big Question and I'm Vikram Oza. Now, India's iPhone story has hit a big milestone. It's not just a tech headline, it's actually a macroeconomic one. In November alone, if you look at Apple and its exports, there are exports of $2 billion worth of iPhones from India alone. And that's not a rounding error. That is actually scale. In fact, 3 out of every 4 smartphones that India has exported that particular month were all iPhones. And for the financial year so far, iPhone exports have already crossed $14 billion. So let's just put that number in context. Just a decade ago, India barely featured in global smartphone manufacturing. And today, 1 in every 5 iPhones globally is now made or assembled in India. So India is accounting for 12% of Apple's global production value. It has 5 iPhone assembly plants. It is now assembling even the high-end, the Pro and the Pro Max models, something that Apple had never done outside China earlier. And this kind of surge that we're talking about is happening despite the tariff pressures, the ones especially from the US. Smartphone exports to America, they're up nearly 200% year on year. We're talking about tariff pressure, but look at what's happening over here. And smartphones are now among India's biggest export category. Exports are jumping from about $11 billion. Just 2 years ago, it was $11 billion. Now it's going more than $24 billion. This is that scenario last year, but it's climbing. And here's where the story gets really interesting. Apple is now, we understand from media reports, it's now in early stage talks with Indian semiconductor companies. They are trying to explore assembly and packaging of iPhone chips in India. So this would be Apple's first move beyond just assembling phones and getting into critical components. That part of the value chain that really matters. So if that happens, India moves from being an assembly hub to becoming a deeper, more strategic part of Apple's global supply chain. Actually, it also fits into a much bigger trend. We're talking about global companies, from Apple to Intel, Foxconn, Micron, and Lam Research. They're pouring billions into India's semiconductor ecosystem. So quite clearly, this is not just about more iPhones rolling off factory lines. It goes beyond that. It's about where global manufacturing power is shifting, who controls the supply chains, and whether India is now finally climbing up that value ladder. Because if Apple succeeds in India, Now the question is, does it become a blueprint for global manufacturing relocation? Or then, the other side, the flip side, that no question is fair, is Apple the exception and not the rule? Which brings us to the big question tonight. Now that India has developed its iPhone edge in the manufacturing setup, can it materially and effectively? Can we dent China's grip on the global supply chains? It's a good question to ask our panel. And joining us on this discussion and debate this evening, Ashok Chandak. He is president of the India Electronics and Semiconductor Association, the IESA. He's joining us along with Devendra Kumar Pant, the chief economist at India Ratings. Gentlemen, thank you for making the time and joining us. We're also expecting Neil Shah to join us in a bit, and he's, of course, an industry analyst and co-founder of Counterpoint Research. We'll wait for him to join us as well. But coming to you first, Mr. Chandak, from your perspective and where we stand today, you're talking about $2 billion worth of iPhone exports in a single month. This is a big manufacturing boost, as it were, for India, which is, of course, banking a lot on getting our trade numbers right. We need to give an impetus to export. So when you look at a number like this, what is the bearing it has on India's manufacturing prowess?
Thank you. What we need to see this as a very long-term great trend which is emerging. And incidentally, I'm right now in Japan for a Semicon India event. And I will fill up, how the globally companies are creating more and more trust on India. I will narrate that in a while as well. To me, this milestone is structural. It is not an episode, actually. The big companies, for example, Apple and similar any other mega companies, those are consumer-centric and global brand names. They are very disciplined in terms of their global activities. It doesn't change overnight. And the production, as well as the ramp-up, selections happens after multi-years of validation, quality, yield, compliance, reliability, etc. So, the numbers what you put together, and you have mentioned just now, Apple doing $2 billion in a month, actually reflects the trend what we see already. And we work very closely with Ministry of Electronics IT. What we have seen is based on the government consolidated number itself. Our production of electronics over last, let's say, a decade has grown up 6 times, and these are exact numbers I'm referring here. Exports have gone up 8 times, mobile production 28 times, so forth. So the trend is really positive, and this will going to continue. And this is not just episode, as I said, this is also enabled by the multiple policy interventions, those who have been done by the central government and support of the state governments with regards to the electronics manufacturing PLI, the customs clearances, the logistics, the manufacturing clusters, central state coordination, etc.
Sure.
That is really helping out. Another thing what we have seen as a further addition to this is, traditionally we used to be just assembling of the phones when we begin this journey and some other electronic products. Most of the electronic products and phones are now moving towards more value addition. There is a localization which is increasing. That increases not only mechanicals, enclosures, but also the PCBs, charger, logistic services, etc. are moving. This is how exactly China has scaled over time. While we have started only recently, but we are moving in a similar way. But also there are some additional differences, which I would like to narrate.
Yes.
However, I just want to conclude here. The first point, what you mentioned, is we are definitely moving towards a mega scale of electronics manufacturing. It's going to increase to about $400 billion. The programs have been made, the central government, state governments, the industry bodies like IESA are fully in line along with the industry partners. And this is the most important point.
Yes.
There are several industry members. Those are really now catching up their manufacturing capabilities and operational excellence, building those high quality, reliable products. And those would get supported by the localization of the various ecosystem components here.
So, I mean, the trend is positive. And you're saying the ecosystem is building over a period of time. And the pace at which we are growing, you're saying China has taken its time to get there, but India is fast catching up. There was an opportunity and India is grabbing it. But Neil Shah, do you think that we are relying too much on one brand, on Apple?
Yeah, I think Apple is a poster child. So if you look at Apple is the best company when it comes to the supply chain and building an ecosystem. So if Apple starts building up an ecosystem over here around the EMS factories, which Mr. Chandak referred to, and the manufacturing capabilities, I think it attracts all the other players because Apple has the top-notch supply chain, top-notch suppliers. So if those top-notch suppliers come to the party, I think that is what will set a flywheel effect for all the other ecosystem players to set up shop around the manufacturing units. And right from camera modules to display manufacturers, silicon players, and so forth.
Neil, just a moment. And gentlemen, please hold your thought. We'll return to the big question right now. At the end of the board meeting that SEBI has had, there are more announcements being made. Let's cut in and listen in.
Now, as you know, after 1/4/2019, no transfer is possible other than DMAT. But if the physical securities were there and transfer was there, there was up to 2021. It was possible to lodge it and then get it converted. Now, some of the difficulties have been faced, and those difficulties are being addressed in these regulations. So, before 1/4/2019, if you have lodged the claims and if you have, it was in one case something rejected or returned earlier, then we have given already a special window has been opened from July 7, 2025 to January 6, 2026 to allow relodgement of transfer deeds which were executed and lodged prior to the deadline of April 1, 2019. However, if we also have some cases where transfer deeds were done before 1/4/2019, but they could not lodge it before the time 2021 which was given. So therefore, we are opening this window for them in order to come in and lodge it. Please note that it is a pre-1/4/2019 transfer that we are talking about. Post that, transfers in physical securities are not allowed. The next is the aligning the timeline for transfer of unclaimed amount by an entity having listed non-convertible securities with Companies Act. So this is where, as you know, that there is an Investor Education and Protection Fund, IEPF, and investor, then it is also there at Ministry of Corporate Affairs. It's also available with the SEBI. So in case of companies, any unclaimed amount of maturity and interest has to go to, after 7 years, has to go to that fund. There was inconsistency that here there is a debt, for debt securities there is a principal and there is also an interest. So interest is accrued over a period in several tranches. And the 7 years timeline was to be, as per the rules of the IIF, was coming from 7 years from maturity. So this was not very clear. This is being aligned so that there is no confusion. This will also enable many people to claim interest from the issuer itself, because there is generally a little more difficulty in getting that from the IEPF. That's a separate set of rules. So now it will go, the accrued interest which is there, it will go to an escrow whenever it is to be paid. If not paid, 30 days. Within 7 days, it goes to escrow. But it doesn't immediately after 7 years go for that. It waits till the maturity. From the maturity, it goes 7 years. The matured principal plus all the interest which is there together can go until the time it remains in an escrow with the issuer, which means that the claim would be possible from the issuer as and when the people are able to track it and trace it. So generally, due to various reasons, the interest is, people are not able to get the interest. It may be change of address. It may be they would have shifted locations. They may not be aware of the physical thing, and as and when they are aware, they can go and claim. But that amount should be available, and that amount will be available in escrow with the concerned issuer. So this is basically to realign to align with the IEPF rules. Then the next decision was relating to the regulation of activities of credit rating agencies. So the credit rating agencies, which are regulated by SEBI, can also fall under the purview of other financial sector regulator. They may be, for example, rating loans, etc., which is the purview of RBI. They may also be doing some work relating to, say, unlisted securities, which is not really being in the purview of SEBI. So there was a difficulty faced by the industry in terms of not being able to, because of our provisions, which said that they can do so only if there is a guideline by the concerned financial sector regulator. Now, in absence of a guideline, they could not have done it. There are in many areas where there are no guidelines from that concerned regulator, which means they were not able to do it. So we are making it now clear to enable them to take up such activities, but making it very clear that what would be the disclaimers and conditions which will lie, which means that basically they'll segregate certain business processes in a manner where investment protection and other benefits of SEBI will not be available in relation to non-SEBI regulated activities that they do, and they have to make it explicit. They also have to intimate, they have to have a separate email IDs, etc. for those clients, and subject to that, they can actually take up those activities. So this is something which is an important area in which they can do, and that will also be good for the economy, because in many cases there would be unlisted entities also for listed players also. There could be subsidiaries. So in which case they normally rating, when it is done, it's also done on a company on issuer and consolidated basis, including subsidiaries, including unlisted entities also, which was a difficulty so far as they were concerned, that our regulations were in a way preventing them from doing so. So we are removing that. It's an ease of doing business measure, subject to, of course, the due risk mitigation which they will do. Like if they have to take up additional net worth would be required if certain other regulator says so. So that will not be merged with this net worth. So there are certain safeguard measures. Subject to that safeguards, they can do that. The next item was relating to high value debt listed entities. As you know, HVDLEs, they are the ones who have been classified today with an outstanding, of non-convertible debt of 1,000 crore or more. Now, this limit is actually very low in relation to the debts that many of the entities raise. For example, NBFCs, etc. So there is a constraint on them. So that's being raised to 5,000 crore. And so this is an ease of doing business. What happens with the HVDLEs is the additional corporate governance requirements. And those corporate governance requirements would be extra costs also to them. And obviously more onerous measures, and will dissuade them otherwise to do that. So that is one set of proposal. The second set of proposal is to make those corporate governance measures consistent with what is obtaining on the equity side. Because what has happened is that last few boards, we have relaxed those requirements there on the equity side. but consistently we have not done it here. So we are aligning it with that. So if for example, if you have a issuer who is also on the equity as well as on the debt, there's a consistent provision should apply instead of. So we have basically harmonized it with whatever ease which we have given it. For example, RPTs, whatever scale-based RPTs we have applied there, we are also applying it there. So this is basically kind of a catch-up and harmonization. The other is raising the threshold from 1,000 to 5,000 with a view to further enabling this sector to raise the debt easily. The last important proposal was relating to the high-level committee on conflict of interest. So the board deliberated on this matter, and it's and acknowledged that there is a comprehensive review which has been carried out by HLC, and expressed that we need to have a detailed discussion on the recommendations in the ensuing meeting, keeping in view public and media comments, certain concerns expressed by employees, operational modalities, and the way forward. So, thank you, friends.
First of all, congratulations on the overhaul of the two major regulations that you mentioned. First, on the stockbrokers regulation, what I have noticed, apart from the reduction in the paras and the total length, you have fixed the responsibility on stock exchanges. Is there any other change which happens after this?
No, it is basically to make it clear that it is for the stock exchanges which have to be the first line of regulator. And many of the things, they have to come through the stock exchanges, not directly. So that is the point which has been made clear.
Also on the mutual fund regulations, is there any timeline of implementation as well which has been kept in mind?
Mutual fund will be 1st April onwards, and because now it will take some time to notify, and it will be applicable from 1st of April.
Will there be, transition kind of effect, or one go the implementation will happen?
One go.
Chairperson, as far as the mutual fund PER regulation itself are concerned, as far as the brokerage side of it is concerned, of course, given some relief in terms of what was put in the consultation paper, it's not as aggressive as to that. What has been the thinking behind that? What was the presentation that came from the mutual fund industry stakeholders? Second thing, one constant understanding that we get from mutual fund is that they say that the difference between a smaller fund, a newer fund, younger fund versus an older fund and a bigger fund is very steep. And the thinking is that since something is doing very well, it means that it's been accepted very well. But lower TKR is there on that one. It should be the other way around, and at least the steepness should reduce. What is SEBI's view on that particular aspect?
I think the telescopic way of doing things is more friendly to investors, and they should continue, because if you are able to have a larger AUM and you have bulk, obviously you are able to meet with some cost more effectively, because it's a percentage. So the telescopic, I think, is a well-established thing, and it should continue, and we have to look at the investors.
On the same mutual fund, you have changed from TER to PER now. What goes behind the name change? It is something like base rate which we used to have in banking system. Something like that over and above it can be charged depending on the scenario.
Yes, the point is that all these charges will be visible, because when one can say that you have everything clubbed is much better for me. कि मुझे आप एक बताइए बस कितना, इतने सारी चीजें कि नहीं है. लेकिन जब आप कॉम्पोजिशन में जाते हैं तो उसमें भी काफी क्लैरिटी मिलती है, डेटा मिलता है कि कौन कितना है, और उसके बाद कल आप यदि मान लो टैक्स बढ़ गया या कम हो गया, उसमें हम फिर TER में फिर बार बार एडजस्टमेंट करते रहेंगे. तो तो जब आपने देखा होगा इनवॉइसिंग भी होती है, पहले जब भी इनवॉइसिंग वगैरह होती थी बहुत सारे कॉन्ट्रैक्ट्स वो डिस्प्यूट्स पे चले जाते थे, जब वो कहते थे कि आप इसको ऑल इंक्लूसिव बताइए, इंक्लूसिव ऑफ टैक्सेस बताइए। तो इंक्लूसिव ऑफ टैक्सेस में इंसिडेंस क्लियर नहीं होती, कस्टमर को भी क्लियर नहीं होती, तो इसीलिए आपको ज्यादा से ज्यादा जो कॉन्ट्रैक्ट्स होते हैं वो दिस प्लस जीएसटी होगा, क्योंकि जो पास ऑन होते हैं टैक्सेस, दो तरह के टैक्सेस होते हैं, एक डायरेक्ट टैक्सेस होता है जो पास नहीं होता, जो इनडायरेक्ट टैक्सेस होता है जो कस्टमर्स को पास होता है वो विजिबली दिखना चाहिए, तो अदरवाइज नहीं तो क्लैरिटी नहीं होगी आपको कि एंड देन देयर विल बी आल्सो पॉसिबिलिटी ऑफ फजिंग थिंग्स।
So just one follow-up to that. Can we assume that now the BER has been fixed as far as the floor of it is concerned, and any changes going forward?
It is not the floor; it is a cap.
It is a cap, sir.
So therefore, let me make it very clear. When we say this is the caps, which means the maximum, so which means that you can competitive industry is competitive. You can still offer lower. Like if you want to attract the people to your mutual fund, you can even offer lower than this, if you can afford it. If you suppose you do the cost saving, you do technology, if you can do that, you can offer. So this is caps.
So this will be on new SIPs after April 1st, or will it apply to the existing ones also?
No, it will, everyone will be.
Okay. So when in the consultation paper for cash market, it was much lower for both markets, and now it is, you've increased. What did you hear from the industry participants that pushed this decision?
No, I didn't get it.
No, the brokerage
cost increases or decreases for an investor with the BER. The entry cost increases for an investor, or it comes down with the BER?
No, obviously, I mean, which one are you talking?
The BER, with the introduction of BER.
Yeah, so even if you,
benefits or,
even if you say the BER is now more transparent by excluding the taxes and putting it separately, and incidence, suppose more or less remain the same in that slab. In one or two, there is a slight changes also, but broadly it is the same. The exit load completely goes 5 bips.
So, sir, will mutual funds, AMCs, will their profitability be impacted by these changes? Have you looked at that? Because shares of AMCs had corrected after the proposal was first floated. And have you analyzed as to how much, whether their profitability will be impacted?
We have heard all sides subsequent to the proposal. And now our present proposal is a balanced version. It is not, I would say, as radical as it was proposed in the thing, because of several facts which have been brought to our several data which have been given to us. So therefore, for example, on the brokerage side, it was very clearly brought to our notice that the sell side research is a bundled cost. And if we were trying to propose that they can unbundle it and they can actually pay brokerage at a lower level and pay for research separately, that model is, a business model is not available, number one, today. And wherever it has been tried, for example, it has been tried in MiFID in Europe and UK, it was not found to be successful, which led to decline in the sell side research, which is not in the interest of either investors in general, because a lot of broadcasting they do, if they stop covering those stocks, then everyone will be a loser. Not only the people who buy that their brokerage, even otherwise. Because many of the retail investors who are independently investing, they have a source of knowledge about the stocks which are covered by others, which are broadcast. So therefore, taking into consideration, we find that there is a different type of, for example, arbitrage funds, there is a smaller brokerage possible because there the research is not as important. But in many areas, research is important. So therefore, a balanced view was taken, also based on certain data, which was presented by the industry to us as to what kind of thing will be reasonable to be done.
So this looks like a better deal for the industry than they had hoped for. But moving a little away from today's proposals, one or two broad brush questions. One is, in the recent months, in fact for more than a year now, one of the things that is in conversation in capital markets is how a large chunk of the IPOs are coming in the form of OFS and not fresh capital issuances. And there is a lot of debate about whether this really forms capital or not, etc. First of all, as SEBI, how do you look at this issue? Is this issue even under deliberation? Is there a possibility that down the line we might consider some kind of a capping of OFS, a certain proportion be thought about? So what is your general thinking? Two other questions. One is, in a recent high-profile issue, there was protest by some of the investors in anchor allocation. And there are two issues out here. Of course, it's a perennial issue for many, many years that, anchors allocation is always subject to the discretion of brokers and the selling shareholder, etc. But one of the issues that a lot of funds highlight is that a lot of funds come into anchor allocation at the strike price, which is not really the role of an anchor. The idea of an anchor is essentially to enable price discovery, where you independently judge an issue and put a price tag to it. And that's not something like, most of the funds that are coming in are actually not, are essentially executing at strike price and not really playing the role of an anchor. So is this a feedback that has come to you, and what is your thinking around it? And a third thing is, recently a circular was sent to the mutual fund industry that the pre-IPOs allocations will be disallowed. So some of the funds that have been investing in pre-IPOs argue that the circular argued that because pre-IPOs tend to be illiquid, and the idea is to ensure that liquidity in public funds be maintained, these are disallowed. But the understanding is that... Sorry, just 3 seconds.
I'm just keeping loose track of the questions.
Sorry, I'll wind up this thing.
I think this is what happens to what is called opportunistic behavior. When you say, you will ask a question, one question, then you will say one, part A, part B, part C, part D. So I'm not able to grasp it, and we can probably...
Just the first two questions.
So, okay, the first question is on the IPO. I'll just draw your attention to, the way money is fungible. So money can come in first, come in later, come different ways. Now, how do you think that someone will raise capital always? A first timer, for example, if he were to go as a greenfield, and if he goes in there and he claims that, okay, we want to do it, a big thing, and I want to form a company, capital formation, so I'm seeking money for that company. So how do you think that he will do, and what will be their response? Unless you have built in a lot of your own past credibility. Like XYZ, who has done many companies, he wants to do a fresh company, people will probably, because they look at certain records. So therefore, when does the money come first? When you are trying to raise equity. So in many cases, people will give you the money at a certain stage of your credibility being established.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m.
Hello, good afternoon and welcome to Market Express on NDTV Profit. I'm Himakshi Bahugna. Over the next half an hour, we'll track the top market movers, stock-specific action and also the key triggers driving the trade. Let's get straight to the action and see how the markets have fared today. So the benchmarks, it was a tepid day if we look at the Dalal Street, with Nifty ending the day near day's low and also below 25,900 levels. If we talk about Sensex, so that also shed more than 80 points, and Sensex also lost more than 80 points. Advanced decline ratio, if we look at, was sharply tilted in the favor of the declines. And if we talk about the sectors, so most of the sectors have ended the day in red, with media and defense leading the losses. PSU, banks and IT remain very resilient. Now let's look at the key stocks that were buzzing in trade today. First up, we have Meesho. So UBS has initiated coverage on Meesho with a buy rating and also a target price of 220 rupees. The brokerage calls Meesho a game changer in India's e-commerce space. Now, democratizing the online shopping from villages to rural charts, rural carts, UBS is seeing a substantial growth runway through FY30, and this is backed by a clear path to profitability and also cash generation. Now, contribution margins are projected at 6.8% by FY30, while the EBITDA margins could reach 3.2%. So in short, UBS believes that Meesho is well positioned to capture India's next wave of digital commerce. Another counter is Ahluwalia Contracts that has bagged 888 crore order from Bihar State Tourism Development Corporation for EPC works with a timeline of 42 months. So this adds to an already strong order book of 18,057 crore rupees as of September 30th, which is slated for execution over the next 2.5 years. So the latest win reinforces Ahluwalia's position as a key player in the large-scale infrastructure and the tourism projects. Next up, we have Shriram Finance that has announced that its board will meet on December 19 to consider a fundraise. So the company is exploring options, including a rights issue and also a qualified institutional placement. So this move comes as Shriram looks to strengthen its capital base and also support the future growth plans. And Saregama is set to acquire 51% stake in Bhansali Productions for 325 crore rupees. So the deal marks a strategic move into the premium film content and is also expected to be EPS accretive by FY27. So with this acquisition, Saregama strengthens its foothold in the entertainment space, combining music leadership with marquee film production capabilities. Now, big development at Ola Electric. Founder Bhavish Agarwal has sold 2.6 crore shares, or probably 0.6% stake at 34.10 9 rupee per share, which is a steep 53% discount to the IPO price. So the company clarified that the sale was to fully repay a promoter level loan of 260 crore rupees, and importantly, all the previously pledged shares, about 3.9%, will now be released. So post this transaction, the promoter group will continue to hold roughly 34% in the Ola Electric. Now, another counter that has been buzzing is the Indian Overseas Bank. So, the government is set to divest a 3% stake in Indian Overseas Bank through an offer for sale over 2 days. So, this plan includes selling 2% upfront with an option to offload an additional 1%. So, the OFS floor price has been fixed at 34 rupees per share, which is 7.6% discount to the current market price. So, the divestment is aimed at meeting the minimum public shareholding norms, as the government currently holds 94.6% in the bank. Next up, we have Kotak Securities that has upgraded, Vedanta to a buy rating and also raised its target price to 650 rupees from 550 rupees. And they have cited strong tailwinds from the recently approved demerger and also the firm commodity trends. So aluminium remains in sweet spot with the growth and margin accretion drivers. Now, Kotak sees a very clear upside there, projecting EBITDA could be, 10% higher in a bull case scenario, which would value Vedanta at 770 rupees per share. And viewers, Indraprasth Gas was buzzing after Nomura upgraded the stock to buy from neutral and also hiked the target price to 230 rupees. So the brokerage expects margins to improve on lower tax and also transmission tariffs, while the transition to DTC is nearing completion. So setting the stage for volume recovery after a sharp correction, Nomura says that the risk reward has turned favorable and making IGL a compelling play in the city gas distribution space. Next up, we have Kane Semicon that has partnered with Japan's Mitsui and AOI Electronics to strengthen India's semiconductor manufacturing ecosystem. So the collaboration will focus on enhancing the capabilities in the design, advanced packaging and also material readiness. So key players for chip production. This strategic, tie-up aims to really accelerate India's semiconductor ambitions and also build a robust local supply chain under the Make in India push. And viewers, Vikram Sola's board has approved a massive 4,371 crore of capex plan for phase 1 of its battery energy storage system business. So this investment will be undertaken through its arm VSL Power Hive and also includes commissioning a unit in Tamil Nadu. The project will add 7.5 gigawatt per hour of cell manufacturing capacity, and this is also expected to be operational by FY29. So the capex will be funded through a mix of equity and debt, and this is marking a big step in India's clean energy and storage ambitions. Viewers, NBCC has secured 2 new orders worth combined 345 crore rupees. So the larger order, that is of 333 crore rupees, comes from IIT Mandi for construction of academic blocks, while another 12 crore rupee order is from Kandia's SEZ. So with these wins, NBCC's order book stands strong at 1.28 lakh crore rupees as of September 2025, and this is to be executed over the next 2.5 years. Another stock that was buzzing was Waaree Renewables, and it has inked a long-term power purchase agreement for 300 megawatt solar power project with the leading global tech giant. So the deal strengthened Waaree's position in the renewable energy space, with its unexecuted order book standing at a robust 3.48 gigawatt GWP as of Q2. So this partnership underscores growing corporate demand for the clean energy and also Waaree's execution capabilities there. Time now to take a look at what sources are telling us. Looks like there's no immediate relief in store for Vodafone Idea. Sources are telling NDTV Profit that the government is moving cautiously on a relief package for Vodafone Idea. Officials say that the centre is wary of any steps that could really impact the valuation, given its 49% stake in the company. So Vodafone Idea shares have been volatile, adding to the market sensitivity around the proposal, and a final decision could take time as the the government weighs options slowly. So meanwhile, Vodafone Idea has reportedly submitted 2 to 3 proposals to the Department of Communications for consideration. And on to some more corporate action now. The Reserve Bank of India is back in the market with a decisive intervention to halt the rupee's one-way slide. So the central bank sold dollars aggressively on Wednesday, stepping in as the rupee weakened close to 91 to a dollar mark. Now, following the intervention, the currency has staged a sharp intraday rebound, strengthening to around 89.75 before settling near 90.28. So bankers say that the RBI appears uncomfortable with the pace of the depreciation, calling levels near 91 overly stretched. So today's move echoes the central bank's heavy-handed action seen in October and also November, when it intervened multiple times to break the persistent downward momentum. Notably, this time the RBI entered the market shortly after onshore trading began, sending a clear signal that it will not tolerate a disorderly move in the rupee. Next up, we have ICICI Prudential Asset Management that has scripted history in India's primary markets. The company's IPO has garnered bids worth nearly 3 trillion rupees or about $33 billion, making it the 4th most subscribed IPO ever in India. So the $1.2 billion issue closed on Tuesday and now ranks behind only Reliance Power's 2007 offering, LG Electronics India's IPO earlier this year, and Bajaj Housing Finance's issue in 2024. So institutional investors led the charge with QIB portion subscribed an eye-popping 124 times. Market participation, market participants are saying that strong, parentage and a robust outlook for India's mutual fund industry made the IPO an attractive bet. So the listing also sets the stage for a record fundraising year, with several large financial firms tapping the markets in 2025. And Tata Chemicals has raised 1,500 crore rupees through the allotment of non-convertible debentures, that is the NCDs, via a private placement. Now, in a regulatory filing, the company said that it has issued 1.5 lakh listed unsecured rated and redeemable NCDs, each with a face value of 1 lakh rupees. So the debentures carry a fixed coupon or 7.06% and also have a tenure of 2 years and 364 days. So the issue was allotted to identified investors using multiple yield allotment methods. Tata Chemicals also said that the NCDs will be listed on the debt segment of the National Stock Exchange. So the allotment was approved by the internal committee of the company's board, marking another step in its fundraising plans through the debt market. And a major twist in the global media consolidation story. Warner Bros. Discovery is likely to reject Paramount Skydance's hostile takeover bid worth over $108 billion. Now, according to Bloomberg, the Warner Bros. Board has serious concerns around the financing structure and also key terms of Paramount's all-cash offer. So the board is expected to take a call as early as Wednesday and also may even urge the shareholders to vote against the proposed takeover. Meanwhile, Netflix continues to emerge as the front runner. Sources are saying that the Warner Bros. Board believes Netflix proposal offers better strategic value despite Paramount Skydance coming in now with a higher bid. So Netflix was the first to make a move earlier this month, setting off a high-stakes battle for one of Hollywood's biggest studios. And Xiaomi has begun expanding the rollout of its latest HyperOS 3 update in India, bringing Android 16 and a host of new AI-driven features to more devices. So this update, which was first unveiled at Xiaomi's September launch event alongside Xiaomi 17 series, is now being pushed to a wider lineup. Now, according to the company, eligible models include Xiaomi 14, Xiaomi Pad 7, Redmi Note 14 5G, Redmi 13, Poco F7, and Poco M7 Pro 5G. So HyperOS 3 comes with refreshed system animations, new widgets, and also AI-powered writing and editing tools aimed at boosting everyday productivity. So users can manually check for the update through the HyperOS section in their device settings as the phased rollout continues across the country. And Apple is exploring a deeper footprint in India's semiconductor ecosystem. According to a report, the iPhone maker is in early stage talks with Indian chip makers to assemble and also package components used in phones. Sources are saying that Apple has held preliminary discussions with CG Semi which is setting up an outsourced semiconductor assembly and also testing facility in Gujarat. While talks are still at a nascent stage, this marks the first instance of Apple considering chip assembly and packaging in India. So this move could significantly strengthen India's ambitions to become a global semiconductor hub and a key focus area for the Modi government. Viewers, Apple has crossed a major export milestone in India. So according to a report, the company has exported a record $2 billion worth of iPhones from India in November alone, which is the highest monthly figure for the current financial year. So with this, the total iPhone exports from India in the first 8 months of FY26 have climbed to $14 billion. Now, Apple now accounts for nearly 75% of India's total smartphone shipments in November, which stood at $2.7 billion. So most of these exports, came from Apple's manufacturing facilities in Tamil Nadu and Karnataka, where Tata